Good morning, everybody. Hopefully this is coming through. Please let me know on the comments that you can see me and you can hear me. Getting everything set up so I can read your comments. There we go. Turn my volume off. Awesome. Awesome. I don't know why it was giving me problems this morning. It just kept saying unavailable. I posted the screenshot in the room. I know YouTube either got hacked or I don't know if it was something internal, but the other day YouTube went down right at the end of our live stream. I believe that was either Thursday or Friday. And it said that Google and YouTube and several of their services were down temporarily that day. So we'll see if we get a couple more people joining us. There's only 2 of you on right now. We'll get started here in a minute. Good morning, Sunny. Good to see you as well. As you can see, I've got ES up here on the screen right now, and just waiting to see if we get some more folks joining us. So I'll get things set up. And let me stretch this out. Okay, so we opened at 25.53.25. So let me get in our opening price level. 25.53.25. Let me just get this all set up and then we'll get going. And we did have a new member who joined the room this morning, the premium room. And Steve, he's on. Good to see you, Steve. So Steve is a new member to the premium room. So welcome, Steve. Todd Father, good to see you. So we as you can see, we haven't missed much. Steve, we normally try to get on Mondays, Wednesdays, and Thursdays at 9:25. If YouTube wouldn't have been giving me issues this morning, we would have been on at 9:25. We watch market open for a few minutes, and then we start looking at other names. Now, what I'm going to be doing over the next 2 to 3 weeks is we're really going to start diving into price action trading. And I know you're brand new to the room, so you obviously haven't had a chance to go through and look at all the lessons and watch previous premium private live streams yet. But price action is what we primarily trade. Price action, supply and demand, and support and resistance. But over the next 2 to 3 weeks, we're really going to dive into price action trading. So when you get a chance, the last about 8 pages of lessons that I've put in the premium lessons channel are all on price action. And in the coming days, there's actually going to be more when I have some free time. It took me about 5 to 6 hours on Saturday to do all of that. And I actually started working on it Friday night. So it does take quite a bit of time, but there's more on price action than just those like 8 pages of notes I've already put in there. So those who are always on here, we see what normally happens, right? Price moved to the upside, now it's moving down. Almost always happens that way, right? Moves one direction and turns around and goes the other direction. Steve, just so you know, this purple dashed line here is the opening price level, and we always mark that on anything we plan on potentially trading. that gives us an idea throughout the day. Is most of the action below opening price or is it above opening price? As well as it will act as some support and resistance throughout the day. Some days you'll see price will start one direction, it'll come up, it'll hit, and it'll bounce, and it'll come back up and bounce, and come back up and bounce. And then there'll be other days it's exactly the opposite. It'll be above and it'll act as support throughout the day. Now, a lot of times what will happen is the first hour and a half or so of the day, price will move one direction, then it'll reverse and reclaim, and the rest of the day, it'll move the opposite direction. So it's important to know what that level is. Steve, I totally get it. I've got 3 kids and I'm in my office right now, but having 3 kids at home all day obviously can get hectic. Totally understand. Okay, so price action so far, we rarely, as everybody else in the room knows, we rarely trade the opening candle. We want to see what price is going to do. We want to let price action dictate to us what it wants to do. And the things that we are looking for primarily are hammers after a strong move. So this would be considered a strong move right here to the downside. If we would happen to get a hammer here, okay, that would be something we would want to know about. And then we would look to enter when the very top of the hammer gets taken out, because it's very likely at that point that price is going to move in the other direction. Excuse me. Vice versa, if we had a strong move to the upside and then we get a shooting star, okay, that's something we want to know about. And on the very next candle, we would look to enter if the bottom of the shooting star got taken out. And at that point, we look for targets. We're looking for things like bigger wicks, moving averages, support and resistance levels, basing. Okay, what is basing? Like this is basing right in here. See how we moved up, based. So this would be a rally, base, rally. Okay, so that's basing. On the way back down, you can see where price stopped. All right. So if I was to draw this in, it would go right across the top of here and then down to the bottom of these wicks. And that's exactly where price stopped. It's not a coincidence. Right? It's not a coincidence. And then it started moving up. Okay, price still trying to move down. Now, again, I don't know how much Twitter, FinTwit information you guys consume in the morning. I try to put bits and pieces in the premium room for you guys to digest, and things that I think are important. But this morning, one of the things I noticed was how many people were bullish on the overall market this morning. So right now, are we surprised that the market is going the opposite way? No, we're not, right? Because we know what's likely to happen when the majority is leaning one direction. Excuse me. I even seen somebody was putting, I think it was the, don't hold me to this, but I think it was the open option interest on the market this morning, and it was heavily to the call side, right? Which means people are bullish. Well, what are they doing here in the first 15 minutes? Right? We're taking it down. We're taking it down. All right. So I just had an alert go off. I got all kinds of alerts going off here. So I had one on Google, then I had one on IWM. Let's go to Google first. All right, so here's Google. You see Google is already, okay, here is where it closed on Friday. It actually gapped up and it's selling off hard. It's selling off hard. So what that alert was it was telling me that the daily low on Google from the previous day, so whatever day it is, we're talking about price action right now, Whatever the previous day is. If it's a Tuesday, the previous day would be Monday. Today's a Monday, the previous day is Friday. The previous low was just taken out. Okay, so that's something important to know, right? So if we come over here, where are the potential obstacles to the downside? Primarily, it's this big wick on this hammer right here. Now, Steve, you being new, and actually there might be a couple of new people in here. I don't know if Kelsey's in here or not this morning, but so here we had a strong move to the downside. Then we had a hammer. So we enter right there, okay, and look at the move we got to the upside. Where would our targets have been on a scalp? For me, it would have been somewhere up in here would have been T1, and then somewhere before the top of this wick would have been T2. Where did price stall out? Right here at the top of this wick. Okay, again, we know in this room, the members who've been in here for a couple of weeks now in the premium room since the beginning, they're starting to get this. They're starting to see it. They're starting to see how this stuff just plays out over and over again. But this is a hammer, right? After a strong move down, that's a trigger for us, okay? That tells us, now we don't enter immediately, right? The candle opened up here. Why wouldn't we enter there? Because we don't know anything yet. What if it starts going the other way? Okay, but we know what the probability is. The probability is that price is going to move up. So when the very top of this wick right here, or if it's just the body, the very top of it gets taken out, that's where you look to enter with a nice tight stop. Okay, and you'll determine what your risk tolerance is. And then you have to have targets for the way up. So target 1 would, for me, would have been probably right around the top of this candle or maybe 50% of this wick. Target 2 would have been somewhere up here before the top of this wick. Now, why do I like to exit before? Okay, you guys are starting to catch it, right? Is because I want to avoid bounces like this, because I primarily play options. So if you get a bounce back like that, you're pretty much giving up almost all your profit. Now, if you're just playing shares, equities, it doesn't hurt you as much, but yes, that's still going to be taking profit away from you, right? And then it moved down and then it moved back up. We scalp in here, we day trade. There are a couple people that like to swing trade a little bit. Right now, swing trading is difficult in this high volatility environment. Okay, so you would enter right here, okay, tight stop, probably just below this body. This would be target 1 right up in here. You would have easily hit that. And then target 2 for me would have been somewhere before the top of this wick. And as you can see, you would have easily hit target 2. All right, so on Google that day, let's see, the high was of this candle was 117.50. You would have looked to enter at around 117.75. Okay. Your target 1 would have been right in here, which would have been around 11.29, 11.30. All right, so that's already almost a $13 move. And then your target 2 would have been somewhere up around here, which about 11.43 to 11.44, right up in there. Okay, so that's another 20 some dollars, right? It's 20 some dollars from there. So that'd be a good scalp, right? That is a price action play. These types of setups are all over the market all the time. All the time. Okay, so let's go back and look at the market, and then we're going to look at these other names. I've had alerts going off before you guys even were able to get on here. Because what I did over the weekend, as I was working on the notes for the premium lessons room, I went through and I was marking all kinds of alerts, price action alerts on all kinds of different names. So we may have alerts going off left and right. I already had a bunch going off. Okay, here's IWM. Okay, here's IWM. Oops, I'm sorry, this is the market. IWM, we had an alert go off. Okay, still below opening price level. Look where we flushed down to. Okay, so first move out of the gate was up. And again, we know that's to try to mess with the psychology of retail traders. Then it flushed down, and where did it catch support? At the 20 simple moving average. Okay, we're on a 30-minute chart. For those of you who are new, I'm almost always on a 30-minute. It's what I watch. It's what I trade, other than when I'm doing my research, when I'm looking for factors that are going to help me determine whether trades are good trades or not. Okay, so it came down here, caught some support, but we're still red. We're back up here around this 25, 47, 50 area. So we're going to set alerts above and below this candle. That's going to give us an idea. That allows us to go look at other things, and we don't have to worry about missing anything. Okay, so we got alert above, and now we'll set an alert just below. That's what I do all day long. For those of you who are new, I just set these alerts on things that I watch, like the market, right? And now I can just go look at whatever I want to look at. If that alert goes off, I just get right back to it. Okay, so we're going to go to IWM. Okay, IWM is the small cap ETF of the market. So IWM is the market, but it's only the small caps, right? Okay, so the alert went off because we took out the low of the day on Friday, all right? Now we flushed down, right? We came down, we look over here, this wick has given some support. It's kind of pushed back up, still red on the day, all right? If it would get through this, then the bottom of this candle, then we would probably get all the way down into here. You see that? Okay. Again, from a price action standpoint, the others in the room are starting to learn this. Okay, we look for these nice diagonal patterns with small to medium-sized wicks, because when you take out one, right, we know that stops are typically right under here. That propels you down a little bit. If you take this one out, it propels you to here, and so on and so forth. But it couldn't get through this wick yet, so that's pushed back up. So that's something to keep our eye on. All right, let me see what other alerts I had going off. Give me 1 second here, because then we can go look at them. Man, I've had 13 alerts go off this morning. 13. All right, Microsoft. So let's go look at Microsoft. Here it is. All right, so obviously the alert went off because we took out the high of Friday's candle, and look what it's doing. Okay, where's our first potential obstacle? It's this wick right here and this resistance level right here. All right. So there is a potential scalp there for somebody. Obviously, you have to catch it in real time. So you need to set these alerts on things that you might want to trade. Okay, that you might want to trade. But so we took out the high of Friday's candle. This is the end. So let me do this. I'm sorry. I am getting so far ahead of myself. I don't want to confuse you guys. All right. So here's the daily. Okay, that's why the alert's going off. I'm on the 30-minute. Okay, so I've told you guys before, the important candles for price action scalping and day trading are the daily and the 1 hour. So what I did is I marked alerts anywhere, well, I shouldn't say anywhere, on certain names where we had inside candles on the daily, right? So here was the previous day. Friday's day, we were inside of this entire range. Okay, that's what calls it an inside candle. Then I had alerts set to tell me if we went above or below the inside candle. We went above, which tells you there's a potential scalp or day trade there. Now you can go back to the time frame that you trade, which for me is the 30-minute. Now you can look for targets, okay? So now when that alert went off, when that alert went off, I know I'm looking at this area right in here for a T1. Let's see what we might have for a T2. We've already got the T1, which is over a $2 move. It's like $2.50 already, and on Microsoft, that's a good move. Let me do this. Let me go to a 90-day, 30-minute chart. There we go. Okay, we got this big candle over here, and the wick starts about right there. Okay, so this next level could be in play if we break here. So let me show you this. Okay, I'm showing you how to determine where your price targets may be. All right, so right now we are getting a little bounce or rejection right here at the 156.80 level. Right, you see that? We went right up to it. We've bounced back down. Perfectly normal. We also have this wick right here that comes almost up to it. So if you take your cursor, yep, we're still in the wick, right? But we would have already hit T1 when we took this out right here at 154.32, all right? Or when our alert would have went off, okay? And then we would have had a T1 right up in this range. So let's even say your T1 was slightly before the top of this wick. You would have been in that 156, right around 50 area. Okay, you would have been entering down here. So again, that's a $2.20 move. And on Microsoft, that's going to pay you a lot of money. You see how it's bouncing down? Now, I typically, hang on one second here. Somebody was messaging me. I just wanted to make sure it wasn't anything important. I typically, you guys know me, because I'm conservative, I usually just exit right at my T1. I'm usually just out right there. Sonny, you're asking, is there any news on Microsoft? I'm not really sure. I don't try to pay attention to the news as much as some people. The things I put in the room are typically, upgrades, downgrades. A drug company just got, passed a clinical trial, and again, it's only on more popular stuff. Obviously, Microsoft's popular, but I don't know for sure because I'm going to trade price action no matter what, right? Or supply and demand or support and resistance. So even if it does have news, I'm basically waiting for it to move one direction or the other, and then I'm just following the rules of price action. So obviously this alert went off because we took out the high of the inside candle, which was formed on Friday on the daily. That tells me that that's a high probability scalp or day trade opportunity. Once that alert goes off, I have to then find my targets. And once I know what my targets are, okay, and like I said, my T1, I told you before it ever even got up there, would have been somewhere up here before the top of this wick in conjunction with this resistance area. And then your T2, we already looked, there's a big candle over to the left, and its wick starts right here about this level, the 158.60. So if somebody wanted a T2, it would be right up there at the top of that candle in that wick. Okay, so when you get those like medium-sized wicks on the top of a big candle, I typically just try to get to the top of the candle. Once you get into that wick, anywhere, you could see price turn around and bounce on you. Okay, so again, I don't know for sure, Sonny, if there was any news because I'm going to trade the price action anyway. What if the news was negative? Do I care? No, because then I'm looking for that alert to go off when I take out the bottom of the inside candle, and then I would look for targets to the left that way. So it doesn't really matter to me what the news is, if there is any. I mean, this might not be, based on news. Okay, we don't know. All right, so before we look at anything else, let's just look and see what the market's doing. None of the alerts went off, so we're probably still, yep, see, we're still about right where we were when we left, right? Okay, So we know that price will go up and go down and go up and go down, but it's still in this opening range, and we've got a little, about a minute and 15 to go on this candle. Now, once this candle closes, right, then we see what the next candle does, but because this is probably going to be a spinning top, might not be a whole lot to do on ES right now. Okay, so those of you who are new, and even those of you who are not new, we don't want to be over eager to jump into a trade. Okay, so there's a lot of people, they'll have certain names they like I like to trade ES. Okay, I like to trade ES, but that doesn't mean that I want to be aggressively looking to get into a trade. I only want to get into the trades that offer me the highest probability and the best profit potential. Okay, so if we have a signal go off, I was talking about this via a private DM with somebody last night. If we have a signal go off, that still doesn't mean that you have to jump into the trade, right? The first thing you want to do is you want to see, okay, if I take the trade, what's my potential profit on this? Okay, where am I likely, most likely, to make it to? Right? So if you have, we saw this, last week. I just don't remember which day. Remember when price went up to an area? Somebody was asking me would I look to get long here, and I'm like, nope. There's way too many obstacles. We had like 3 obstacles. It was like a moving average, a wick, and a resistance area. And then what happened right after that? Price sold off. Okay. Those are the things you want to look at. We had a signal that was saying that we could potentially enter a trade long on a scalp, but I said for me, way too many obstacles. I don't want to get into this trade. So that's what I mean. When a signal goes off, you've got to look and say, all right, what makes the most sense here? Where am I likely to get to? If it doesn't offer you the right reward to risk ratio, you just pass that one and you go on to the next one. That's also one of the reasons I set so many alerts. That way, when they go off, I can look at them and I can make my own judgment. All right, so we just had one go off there. Amazon says look to go long if daily inside candle is taken out. All right, so we're going to look at one in real time. So let's go to the daily. Obviously, we can see it's moving up. Okay, so let's go and look at the daily. I already know it's going to be an inside candle getting taken out. Yep, here's the inside candle from Friday. We're right up here at the top. Okay, so we actually poked our head above because the alert wouldn't have went off if we didn't. So we've barely poked our head above. All right, if somebody likes to play Amazon, now we look at targets, right? We look at targets. So where are our potential take profit targets? Okay, it's going to be up around here, right? And then let me see, that wick is almost in line with this over here, this wick. So if we get above this, then we're likely to get up here to this 1976.04. Okay, but what you do then is you go back to the time frame that you trade on. All right. So we got the signal, but now we look, okay, is there a reason that I might want to take this trade? All right, my first take profit target would probably be right up here. Does that give me enough profit from where I had a chance to enter? So let's say we were entering at 1938. Okay, the top of this candle, it closed at 1955. So that's almost 30 bucks. That's like $27. So on Amazon, then you do some quick math in your head, based on where you might place your stop. If I get a $25 to $27 move on Amazon, is that offering me the right reward to risk ratio to enter this scalp? Okay, if the answer is yes, then you take the trade, right? You take the trade. Look, price is already moving. Shouldn't be anything over here to slow it down if it starts to get moving. And I would look to exit the trade right up here, slightly before the top of the candle. Slightly before the top of the candle. That's why I said 25 to 27. It was like a $27 move, but if it was my trade, I'd probably get out at about $25. Okay? That is how you look at a price action trade. Yep, Sonny, I was reading your comments. Yes, we did get a spinning top on the very first candle for ES. Okay. Now, in this case, right, what does a doji or a spinning top show us? Indecision, right? Indecision. Or in reality, it's a struggle between buyers and sellers. They say indecision because it didn't go anywhere. It's not showing you any clear direction. Okay, but this wick shows strength by sellers. This wick shows strength by the buyers, and that's why we ended up as a spinning top. Okay, so currently, if I zoom in a little bit for you, okay, currently price is trying to move back up, but we're early in this candle, right? This is not something I want to trade. You get yourself in trouble. Now, could this just go right up here, take this wick out and keep on going? Sure, absolutely. Okay, it just as easily could reverse and come down here and take this out, or it could end up as an inside candle. All right, so because we don't know for sure, that doesn't make it a high probability play. You don't just want to get in here, okay, because it started moving this direction and go long, and then yep, all of a sudden it reverses and starts going this way, and now you're in trouble. You know, at best you get stopped out. At worst, it makes a big move against you and you lose a bunch of money. Okay, again, we only want to take high probability plays. All right, so let me look at some of my other alerts that went off this morning because I want to keep looking at these different price action plays. Okay, I had one go off on Roku, so we'll go look at Roku. Obviously, that's a name we would look at anyway, right? Like we always look at Roku. Get down here. All right, and I'm going to go to the daily because that's what the alert would have been going off on. Okay, all right, so I know what this alert was. I can tell just by looking at it. We ended with a hammer doji on Friday, right? Because I'm on the daily chart now. We barely poked our head above here. That's why the alert went off. I had an alert, and I will always look for these. These are my favorite types of plays. Okay, strong down move, strong move to the downside. We're just going to call this a hammer. It's a hammer doji. And the difference is if the open and close is up in the top, 25 to 30%, and you have the longer bottoming wick, obviously it's going to be more than 2 to 3 times the size of the body because there is no body. Okay, so this is called a hammer doji. We had that after a strong move down. So if we start to get some upside here, you take the top of this out, then you start looking, okay? Here would be your obstacle 1 right here, and then up here would be your obstacle 2. Okay, so that could be just before that would be a T1, and just before that would be a T2. And would it make sense? All right, so the top of this is 89.50, so you'd look to enter around 89.51, 89.52, anywhere in there. You'd probably have your stop just under here, You'd have a T1 of about 95.70. Okay, that'd be your T1. All right, so is that giving you enough reward to risk? I think so on Roku, right? Right, so if your high is 89, just say 89.50 for easy math, and you're looking at getting out up here around 95.70, what is that? That's over $6. Okay, that's a good move on Roku, right? And then if you made it up to your T2, if you had enough to scale out, that'd be around 99.30. That'd be $10 move. Okay, so $6 or $10. And that was another question that somebody asked me in the room, was about scaling out on some of these plays. Can you scale out on scalps? Can you scale out on day trades? Absolutely, right? So let's say you're playing shares. You're playing an equity here, and you're playing shares. And I'm just using numbers that make it easy to do the math. So you have 1,000 shares, or you have 500 shares. When you get to T1, you always want to take off, I would say, at least 2/3 to 3/4, right? So for me, if I had 500 shares, now I don't typically play shares, I'm usually playing options. But for shares, if I got to T1, I'm probably going to take off 350, 400 shares, and I'm going to let that remaining 100 to 150 shares maybe run or try to run up to T2. That way you're locking in profit, right? You can feel good about yourself, takes the stress off. Now you have a little bit left that you can still make some money on if it runs up to your T2. Okay. Now, if it just blows through a level, right, you don't have to exit. You just move your stop up in that case, right? So let's just talk about that for a second. Let's say you had 500 shares, you got in right here, and it comes up and it doesn't even slow down at T1. Then you take your stop from here and move it up to, maybe somewhere right around here. That way, you're set. You're going to profit no matter what, okay? Then when it gets up to T2, if it starts to struggle up in there, then maybe you take 2/3 or 3/4 off and you move your stop up to the top of this wick, right? Because T2 would have been up here. Okay, then you maybe take 2/3 or 3/4 off, and then if it starts to pull back a little bit and goes higher, you catch more of that move. So that's how you keep yourself protected, but you still can catch more of the move. All right? Okay, so that's why the alert went off here, but as you can see, it really couldn't get above there. It just barely got above, and then it came back down. Now, I'm going to analyze a trade before I get into it. And I think most of you should do that. Just because that alert goes off doesn't mean you jump in instantly. And I know I get asked this all the time. Yeah, but what if it just starts to spike and you miss it? Well, then you miss it, right? You want to make sure you know what's going on in this trade before you enter. And are you going to sometimes miss a bigger move because you're taking a few minutes to try to analyze it? Yes. But you're going to protect yourself so many more times, right? You're going to protect yourself. And I was having this conversation with Grayson the other day. Most of the professional traders I know who are really successful, and by professional I mean full-time traders, they're way more worried about protecting their capital than increasing it. You want to know why? Because if you don't protect your capital, you can't increase it. It does not take very many big hits to severely cripple your account or even blow it up. So I told you guys a week or so ago about a friend of mine who, blew up his account recently, and he's a very good trader. And when I say very good, he plays huge position size, huge. I mean, an average trade for him is about 20 grand. Okay, that's how much he's got in the trade. And I told you guys that he got overconfident and he basically went all in on a trade and it went against him. And he didn't have a stop. Okay, and he has since kind of learned from that. Just in the 2-3 weeks since it's happened, he's already built back a lot of his capital. But he was devastated, right? I mean, you're just sick to your stomach when something like that happens. In fact, he just gave an interview. I'll direct that to you guys in the room. He gave an interview to one of the big proprietary trading firms from New York, S&B Capital. They're pretty popular. They're pretty famous. They're on social media. They put out lots of videos and stuff. He did an interview with them last week about blowing up his account because he had met the owner of S&B Capital out at I think it was called Traders for a Cause conference. And they became friends, and he told them about what had happened. So you want to, the reason I'm telling you this is it's more important to protect your capital than to try to jump into a trade quickly and risk like what happened to him. His name is Scott as well. And I've met him in person. He's an awesome guy, family man. He doesn't even trade full time. He kind of does, but he has a regular job. He's a contractor for the military in an engineering capacity. In fact, it's like top secret. He can't even like tell you what he does. But I met him in person last year. He lives down in Destin, Florida, just outside of Destin, in a suburb. And he said at work, most days, like there's only like 2 hours worth of like intense, can't do anything else type work. Other than that, he's got his phone open and he's trading like all day long. And he, like I said, he trades big size, but he normally trades about $20,000 per trade, which I would think for most of us, that's a lot of money per trade. For him, that's normal. But he had a trade recently where he just thought for sure he knew what, by his rules, by his signals, whatever, he thought for sure he knew what was going on. And I think in the interview he said he was $80,000 or $100,000 in that trade. So 4 to 5 times his normal size, and he lost. And he had no stop, went against him, blew his account up basically, and he had to start all over. Okay, let's see. I have some questions around, let's look here. EOQ, market reaction, pension rebalancing, and shorter time frame questions. How does the market react? You know what, Sonny? Post those in the room and I will tackle those like outside of this, because we really want to concentrate on like price action in here right now. But definitely go ahead and post your questions in there or send them to me in a DM and I'll answer them outside of this live stream, because I don't think very many people get into that. So we want to concentrate right now on the stuff that's relevant to like everybody in the room here. Okay. So just go, I see your comments, just give them to me in a different place and I'll get to them for you. Okay. So we're still on here and you can see like right now, price is just not doing much, right? It's hanging out right here at the 20. This is Roku again, right? Now we know the alert went off. Again, we're still on the daily because that's where the alert would have went off. Okay, until the first hour of trading is complete, you wouldn't have hourly signals to look at. Does that make sense to everybody? So overnight, from one day moving into the next, you're going to set your alerts off of daily candles. So this is one thing I'm looking for. Strong move down to a hammer. Okay, strong move up to a shooting star, or inside candles, okay, inside candles on things that I might like to trade or names on my watch list. All right, so we'll probably come back and check Roku here after a bit. We'll see if price does get moving or not. Okay, right now it's just sort of stalled out. Okay, but we just went through how we would look and determine our T1s and our T2s. Let's go back and look at the market. Okay, let me get back to the 30-minute. Again, none of our alerts have went off. So that's telling me that as of right now, with less than 13 minutes to go, okay, we're still in that opening range. Now we are moving up. Okay, we're getting close here. We still haven't taken out the opening candle of the day. Moving up, but hasn't been able to take it out yet. Okay, if it takes it out, where are we likely to go? So we look to the left, right? Right here, this was a resistance area overnight, I believe. Yep, 1:30 in the morning. Yep, 1:30 in the morning overnight. That's where it all changed. Strong move up. We got up to here. Okay, now if we look to the left, look at this big candle. This is what I tell you guys all the time about anything can happen at any given time. Should there be, over here, should there be any major resistance? No. Okay, but that does not mean we just took out the top of this, but now it's fading back a little bit. That does not mean that price can't reverse like it did, right? Right in the middle of this candle. Now, again, I give you guys are new. This will be the first time you've probably heard this unless you've been in the other room for a while. Big moves or big chaotic candles, you can divide them into 33, 50, and 66%. And typically you're going to retrace at one of those levels, with 50% being the most popular. So if it only retraces about 33%, you're highly likely to turn and go back down. It's going to retrace to 50% the majority of the time, and at 50 you can go either way. You know, you may bounce down a little bit and then continue up, or you may see what you see right here and turn back down. Because I can guarantee you, just visually looking at it, that's about 50% of this chaotic candle, without even doing the math. All right, and then if you make it up to 66% retracement, typically what will happen is you'll get there and you'll bounce down a little bit and you'll continue higher, right? So that's something to keep in mind when you have these big chaotic candles or real strong moves. Okay, like if you get a move from here and like 2 or 3 candles, it's all the way down here, you're going to divide that into 33, 50, and 66%. And I can almost guarantee you when it bounces, it's going to retrace to one of those levels or thereabouts. And you know if it only makes it to 33 and starts turning around, it's probably going to go lower. If it makes it to 50, which it will do probably about 75, 80% of the time, it could go either direction. And if it makes it all the way up to 66%, the odds, there is a mathematical formula. Somebody's done the studies before. If it makes it up around that range, I want to say, don't hold me to this, because I don't get into this deep into every little minute detail, but I think if it makes it up around the 66 level, it's about 85% of the time it's going to continue higher, even if it bounces. So it gets up to 66, maybe takes a little bounce, and then moves higher. If it makes it to 66%, it typically goes higher about 85% of the time. Thanks, Sonny. Appreciate that. And then I'll look at those a little bit later. Okay, so here we are over here. Okay, we're still right up here and right at the top of this wick. If we get above here, we know, that's what we're starting to look at, we know we should be able to run to the top of this candle right here. Okay, the top of this candle is 25.94.25. I'm going to mark it. I want to set an alert. Okay, give me 1 second. 25.94.25. Okay, so I put an alert right there. Okay, so if we get going now, I am forgetting about the trend line. You know, we could get some resistance here. All right, because remember the other day I was talking about if we bounced out of supply, where were we likely to go? And I said, you know, possibility is we're going to come down here and test the trend line, and look where we ended. This was Friday. We ended right on the trend line. Okay, I don't trade them. You guys know that. I don't trade trend lines. They're visuals. Okay, but as you can see, now why was this trend line here in the first place? Because, okay, let me go back. I'll just let you guys see it. Okay, because price had respected it in the past, here, and then again here. Okay, that's why it was on there. It's a visual. It's showing you. Okay, price came up here, came back, bounced again, came back. This time it broke through, comes up to retest it. It might come up and retest it again, or it may come up and break on through. It's just a visual. I don't trade it. Okay, but I wanted you guys to see that's where it came from. Okay, while we're here on the hourly, let's just see. Okay, nope. All right, on the hourly, this was not inside of this. We've already got outside of this. Okay, so this will not be an inside candle. It may end up as a up candle, right? And all that means is we ended up higher if it closes higher than the preceding candle. A down candle, right, is if we're talking about price movement. I'm just saying candle. Okay, if we have downside price movement, that would mean we would close lower than the preceding candle. Inside means exactly that. We end up inside the previous candle's range. All right, so Amazon. We just had an alert on Amazon. Okay, Amazon, that alert was telling me we just took out the weekly inside candle. So we've taken out the daily, now we've taken out the weekly. Let's go and look. Now, the only reason I set that was because I wanted to see if a couple of them went off when we were actually on live streams. For those of you who like to play longer time frames, or you do like to swing trade, or you're looking for confirmation of things, then you're going to add in the weekly and maybe even the monthly candles. Okay, this was last week's candle, right? Which was inside. I've already checked it. Okay, 1956.49, 1957. Okay, yep, I knew I'd already checked it. So it's inside this candle's range. So from a higher time frame perspective, this would be a signal. So if you're more of a swing trader, even if it's only a day, 1 to 3 days short-term swing, okay, that might be a signal for you. This is weekly. Then where your target's going to be, okay, up near the top of this wick or this resistance area, then up here around the top of this candle into about 50% of that wick or that resistance area over there. If it would clear both of those, then it's really got some room to run up into here. Okay, so this is Amazon, and this was a weekly signal. We had a weekly inside candle, which we are right now trying to take the top out on. So you can play this on any time frame. Price action can be played on anything. Now, the way it was taught to me and the way I've used it over the years is I don't really like to go below 5 minutes. Okay, so you have the two groups, and when you read my lessons, you're going to see you have your higher time frame group, which is the monthly, the weekly, the daily, and the 1 hour. And then you'll have your smaller time frame group, which is primarily for scalping, which is the 1 hour, the 30-minute, the 15-minute, and the 5-minute. So when you get into things like time frame confluence, which we can't really check today because we're going to get into the start of a new month, and you're going to have your weekly and monthly candles and all that are going to be the same for a while. But when you are into, say, the second week of a month, you can go and look at every single time frame and look for confluence. And all that means is agreement. Is the monthly green? Is the weekly green? Is the daily green? And is the 1 hour green? If they're all green and you're looking at some sort of upside move, the probabilities are stacked hugely in your favor, right? Vice versa. If every single one of those time frames were red and you're thinking about a short move, the odds are highly stacked in your favor. And that's all we're always trying to do is stack those odds in our favor. Okay, I hope that makes sense. All right, but this is a weekly signal. We just took out the top, or we're trying to. We're right at the top of it now. We're trying to take out the top of a weekly inside candle. Now, one of the things that I always tell you guys, right, is use common sense above all else. Now, what I mean by that in this case, when you're playing price action, notice where this inside candle is, okay, compared to this candle, right? It's up near the top, right? Okay, so going into this new day, this new week, what is more likely to happen? Okay, for us to take the top out or the bottom? Well, I guess you could say that could depend, right? Like this could really gap down significantly, but on most normal days, it's probably more likely that we're going to take the top out, and you should already be gauging what would I be looking at as targets if I was playing off this weekly signal, just like you would do for a daily signal. Daily signals are giving us what? Daily and hourly signals are what we're going to play primarily because they're going to give us scalps and day trades. And those are higher probability than weekly or monthly trades. Okay, it's kind of funny because the bigger the signal, it's usually a stronger signal, but when it comes to the actual trades, the higher probabilities lie in your scalps and your intraday trades. And we've already discussed this before. I'll go over it again just really quickly for those of you who are new. Okay, the probabilities from a mathematical standpoint are stacked in your favor on scalps and day trades compared to swing trades because it's much easier to know what something's going to do to a higher degree of probability in a shorter span of time. It's much easier to know what something's going to do in the next 30 minutes or hour or 3 hours than it is in the next 3 days, week, 3 weeks. Because so many variables can occur the longer we push the time frame out, right? Like the coronavirus could get way worse. There could be a war somewhere in the world. Oil could go to all-time lows. I'm just making up different scenarios. There's so many things that could happen the longer your trade is taking place that could affect you. Okay, so the shorter scalps and day trades, those shorter time frame trades, it's easier from a mathematical statistical probability standpoint to be right. Doesn't mean you're going to be right all the time, but it's easier. Okay? All right, Sonny, I seen that. I wasn't ignoring it. Let's go look at Roku. All right, so here's Roku. Oops, I'm on the weekly still. Sorry, let me get back to the 30-minute. Okay, so here we are on the 30-minute. And I'll even squeeze it in a little bit more. There we go. Okay, that was your alert. I got you, Sonny. That was your alert. So that was the opening candle, right? And here's our next candle. We even took out the high there. And Sonny said his was 89.50, which, yes, we easily made that. 89.50 is down here. Okay, that's 89.50. If we go back to the daily, which is where the original alert would have come from. Okay, it's right up here. And then again, where are we looking? We're looking up here, and we're looking up here for targets. All right? All right, so we'll come back. We'll check in on the market before we move on. We're just going to really concentrate on price action and price action rules for a while now. Get back to the 30-minute. All right, you see, we got up there, but then what happened? Okay, so far it's rejected here, and it's rejected here. Right now, it's pushing down a little bit. Okay, what am I talking about rejecting? This wick right here. It's not a big wick, but look, it's where price turned last night sharply, right? So if we look at this on a line chart, okay, sharp pivot. Now, do you know why we mark sharp pivots when we go through and put brand new lines on a chart? What do I always say? You mark large moves and sharp pivots. This is both. It's a sharp pivot and a large move. So that's important to know. I mean, we should, even though this is a 30-minute, let's just go ahead and draw in a level here for now. And then we can always take it off or adjust it later. Let me adjust this. Then we'll go back to candles. All right, you see that? Went right up to it, came back down. Went up, respected it. Went up, respected it. Poked a hit, poked above here. Now what we might see here, look at this. Kind of a break, retest, and maybe a go. We'll see. Okay, break. Didn't get all the way back down here, but look at this. This is really a break and a retest right here. Okay, so it might start to go right now. We'll keep an eye on it. Here, in fact, let's, oh, I already set the alert. I'm sorry. I set the alert to see if it was going to make it up here because we said if it breaks above here, it's highly likely that it's going to at least make it up to there. Okay, that's if it doesn't get stopped momentum-wise right here at the trend line. Okay, whoop, trying to pop. You see that? That big bounce all of a sudden? We can watch it for a second, and then we'll go on and look at other stuff. In fact, while we're watching that, I'm going to see some of the other alerts I had go off this morning. Because like I told you just a minute ago, I had 13 alerts go off this morning. All right. See, it's still trying to go. Almost up to the trend line now. We'll come back. We'll come back. Let's look at another alert I had go off was NOC, which is Northrop. This is a defense contractor. Okay. Now let me go to the daily because that's where the alert most likely came from. Yep, here was our inside candle. Right here we took out the top. We were able to move up here. Okay, you see where this wick is? Okay, if we go straight across, that's where we got up to, where that wick started. And now it's pushed back down. Okay, so we cleared this and we moved a little over $3. Okay, a little over $3. That's not much of a move on Northrop. You can see, look, just look at these candles for the daily. All right, the let's just say a small day for them is almost 20 bucks. Right, that's a $20 candle. This is probably about 20. Actually, this one's 14. That's a $14 candle. This is a $16 candle. Okay, so you can see most of the normal candles, but look how many of these big candles that Northrop gets. Okay, this one right here was a $31 candle right there. Then we went inside, then we took the top out. Okay, somebody who was trying to scalp it, they would have to look and see, okay, here's my first obstacle. On a name like Northrop, does that give me enough reward to risk? I would say no, but you would have to make your own determination, right? Because if we take this out right here, at that time, this candle would have been sort of a green spinning top. So my stop would have went just underneath where the body was, okay, which was probably, well, I can tell you exactly, right there. It would have been about a $2 stop to the downside to try to make $3 to the upside. That's not a really good reward to risk ratio, is it? Okay, because my T1, the most probable is going to be right up in here, which is only going to give me about $3. And my stop would be just under here. Because again, when it took it out, this would have been a green spinning top, and the bottom of the body would have been about right there. So that would have meant, right? That would have meant about a $2 stop trying to get $3 in gain. What is 3 to 1 on a $2 stop? I would have to get at least $6 of gain. So if I don't see that that's highly probable, that's probably not a trade that I want to take. That's the easiest way to figure those things out. Yeah, let's go look at Netflix, Sonny. Let's do it. Okay, so here's Netflix. This is the daily. We did not have an inside candle. We didn't have a clear like downside move to a hammer or upside move to a shooting star. This is somewhat of a shooting star, but it's not after a strong move, right? This one candle is not a move. It's just one candle. Now, if you had 2 or 3 of those candles and then a shooting star, absolutely. This is why I didn't have an alert set right here. Okay, no alerts because it doesn't fit any of the criteria. And as you can see, we easily took the top of it out. Okay, this is somewhat of a shooting star. This top wick is a little bit bigger than you would like to see, but this is definitely 2 to 3 times the size of the body. All right, so by definition, this is a shooting star. It's just not after. Okay, so like here, if we would see it up here, if this candle was over here, I would be really interested, and I would be setting my alert right there at the bottom of it. And if price started to go that way and that alert tripped, I would start looking for targets, and then I would say yes or no. Do I think there's enough reward to risk there? And if so, then you're looking to enter it and go short. Okay, but because of where it was at, it's not really a signal that I want to look for. I hope that makes sense to everybody. It's because of where it's located. It's just one candle. Then we had the shooting star. And again, you can see it just easily went right through it. It's not a high probability play. It's a high probability play if it comes here after this big move up. If it's right there, then it's a really high probability play, but not here. Okay, so this is Netflix. Let's just look at the 30-minute while we're here. In fact, let's go all the way through. Let's look at the bigger picture. Okay, we're about to end the month, right? So here we are on the monthly. Now again, we look at the bigger picture, right? When we're thinking about trades, right? So we're about to end the month. And look at this. We're a huge hammer, momentum hammer to the upside. Okay, so we talk about hammers. Again, if you read through those notes, take your time. We're going to spend weeks on this. If you read through those notes, you have excuse me, a regular hammer, which is going to be at the end or the bottom of a strong move. Okay, so it would be down here. That's a regular hammer. This is a momentum hammer because it happens in the middle or towards the latter stages of a move. This signifies that this move should probably continue. Why do we say that? With a fairly high probability, it tried to push down throughout the month. That's a long wick, and then what happened? The buyers came back in and just pushed it right back up. Right? So that's showing you that on this candle, who is in control? Even though it's going to probably end as somewhat of a doji, it's going to be a hammer doji, and it's going to show you that the buyers at this point are still in control. Because if the sellers were in control, this thing would have ended as a red candle, or it'd be significantly red right now. Okay, that's the monthly. Let's look at the weekly. Okay, there we go. Look at this on the weekly. Last 3 weeks. Green, green, green. and going higher. So now you combine that with what you just saw in the monthly, right? Now let's go to the daily. And we're going to be basically looking at Friday, because we're just starting the day. Okay, so here's Friday. We've already taken out the highs of Friday, and we're moving higher. So now we've got three things, right? What do we have? We have time frame confluence. We have a hammer on the monthly, we're green on the weekly, we're green on the daily, and we already took out the high of Friday. Now let's go look at the 1 hour. And here we are on the 1 hour. Okay, we're green, green on the 1 hour. And we countered, look at this. We countered the sell-off Friday at the end of regular trading hours by going big green after a big red, and now we're trying to go green again. So this is time frame confluence. If you get a signal, some sort of buy signal, the odds are in your favor as long as you have the right risk to reward, okay, that you can go higher. So let's look over here. Let's see, do we have anything? Whoop, sorry guys. Do we have anything over here? Okay, right here's current price. It's this black number right here. So then we look across. Well, look at this. It looks like it's set up for a potential run up. How do we know? Nice diagonal pattern, smaller to medium-sized wicks. Okay, this one could give you some trouble. Could, but that's a medium. Okay, these are small to medium-sized wicks. Price is right across here right now. 372. Okay, so it's right across there. So if it takes this out, it's probably going to take that out, and then it's going to bump it up here. Here is your challenge. You get above that, it should easily make it up to supply. And we already have an alert set up there, because if we get up to supply, we might be looking to go short at that point, depending on what's going on down here, right? We're just using this as a filter, though. Again, this is not something that we normally use. For those of you who are new, this is something that was recommended to me by a professional futures and forex trader that is a friend of mine. He uses it just as a filter. He doesn't trade because of it. Okay, he's not using that to make trades, and I really dislike indicators. But this guy is somebody I respect. He's been doing it for well over 20 years. He's actually an instructor. He doesn't have his own room, but he travels all over the world giving seminars on trading futures and forex. And he uses this. He's been using it for about 9 or 10 years. He thinks that it helps him more avoid bad trades than actually getting him into good trades. Okay, now he does use it to try to help filter for that as well. But when we get up here, his rules would say if we're above 60, which is this top line, then don't try to take it short, because it's saying there's too much momentum and you're likely to do one of two things. Either blow right through here or get up here and just start chopping sideways. Okay, now we're experimenting. I'm going to experiment with it for 2 or 3 weeks. So far, it's working pretty good. It's definitely working more often than it doesn't. I did have a couple that I've already kind of shown you guys where it didn't work, but he would tell you the same thing, right? Nothing works 100% of the time, right? So, so far, it's been pretty accurate on the trades not to take. Now, if it tells you it's okay to go short, it's also supposed to be telling you that you should make it down to the origin of the move up into supply, or vice versa if you're going down into demand. So the origin would be right here. So if this number was below this line, when it gets up here, it's trying to tell you it's okay to go short, and there's a high probability you should at least make it back to here, if not lower. That's where I don't think it's been quite as accurate so far, but I have a very limited number of tests. I'd like to see 100 or more occurrences of something like that before I say it's not quite as accurate as using it as a filter of not to take the trade. So I hope that makes sense. All right, but that's where we're at on Netflix right now. Okay, this is the 1 hour. We're looking to clear this wick. So right now we're below it. We've been above it, but you can see it couldn't hold. We need to get back above there. And if it does, we know that there's one little other obstacle over there that's a wick that's actually a little bit smaller than this. There's a couple of small wicks, which actually should help price if it can get to them. Okay, because when we take out those small wicks, okay, when we take out wicks like this right here, not this one, but like these two and these three, it typically accelerates price because they're easier to get through and we know there's stops right above them and it starts taking out those stops and accelerates price. But right now it's struggling with this wick right here. Okay, so we can come back and look at this here in just a little bit if we're still on. And we'll know if it gets up here because this alert will go off. All right, so that's Netflix. We just had an alert go off on the Australian Swiss. And we haven't looked at any forex yet. Price action works on anything. It works on forex, futures, or equities. Okay, so here we go. Here we go. Let me see if that was a daily alert or if I had that set for some other reason. I must have had it set for another reason because we were not inside on the daily. We weren't. So let me go back to the 30-minute. It went off, so it went off and I didn't read my notes there. I can definitely go back and look at them, but oh, I think what I was doing, I think I had it set that it was taking out the high over here where we had come up into supply and bounced back down. I think that's why I had it set. Right there, you see that? We just took that out and now it's bouncing back down. I think that's why I had it set. Okay, so this is the Australian dollar Swiss. And this alert up here is probably because, let me squeeze it in. Yep, it's the high of this right here. Okay, see that? That's why I had it set. I had the high of this pivot and I had the high of this pivot marked. And right now, look how it's selling off. Let's go back. Look at this. Like literally that alert just went off like a minute ago, right? We've been here 60 seconds, 2 minutes. Look how it's selling off. That's why these sharp pivots are important to note. So that's why I had it marked. Now, if you clear it, right, then you're probably going to run to the next sharp pivot, which is this one up here, 59.47. The high here was 59.06. So from here to the next pivot is 41 pips. So that's why I had it marked. I was looking at a potential scalp from this pivot to the next pivot. But look how it got up there. Now it may still come back, but do you see how it sold off just in a minute or two? Sonny, so slippage is how the spread adjusts once you're in a trade. Okay, that's what slippage is. So just make it easy. You enter a trade and the spread is 2 pips. Okay, and when you go to exit a trade, it's 6 pips. You have 4 pips of slippage. Okay, so they're going to take that away from you. Now, one of the traders in our room the other day, and I'm anxious to hear what he finds out, he was in a trade late in the day on forex.com, which is what I have been using for my forex trading, And I've never run into this yet. And if this is something that could occur, I would be very upset. And he's going to try to find out if it was a mistake, if it was an anomaly. But he entered a trade, and the spread, I believe he said, was like 3.2, and that's pretty normal. Spreads anywhere from 2 to, I don't like to enter too many trades if the spread's higher than 6. That's just me. 6 pips, right? If you're playing a standard lot, that's $60, right? $10 a pip on average. And that's just the spread. That's sort of their commission. But he entered a trade, and I believe he said he entered, and it was like 3.2. And then the trade went his way, and he exited with like 15 or 16 pips. And when he exited the trade, it showed a loss in his account, and he was like, well, wait a minute. Okay, not only did I cover the spread, right, I went positive 15 or 16 pips over the spread where I entered, but when he exited, it showed that the spread when he exited was 25 pips. I have never heard of anything that crazy. So he entered at 3.2 or 3.6, and when he exited, it was at like 25. So that would have meant like 22 pips of slippage. That's like crazy. Now, he was going to reach out. He tried to reach out to him Friday, and they were like, our customer service department's closed until Monday morning. Reach back out Monday morning. I haven't heard back yet what he found out. So anyway, that's slippage. It's the difference between the spread when you enter and when you exit. And, again, it can move a little bit, right? Normal, spread goes up the more volatile a currency pair is. So if a currency pair is not showing much volatility at all, the spread might be 1.5, right? I'm just making it a 1.8. That's showing you almost no volatility. There's always going to be a spread because that's how they're making their money. That's their commission. The more volatile a currency pair gets, the spread moves up. But typically, most brokers, even when it's volatile, a spread might move up 5 or 6 pips. Now, the other day, there were some names that I wanted to trade, but because the spread was like 8 or 9 pips, I kind of have it's not a hard and fast rule, but if something's over 6 or 7 pips on spread, I typically just look for another name to trade. Because again, now if you're trading a standard lot, that's $60 or $70 right off the bat that you have to cover. Besides your stop, then you got to worry, well, if I get stopped out, that's going to be on top of that. So say you had a 15-point stop, and you did get stopped out. Well, not only are you going to lose $150 getting stopped out, you're going to have already lost the 60 or 70 of the spread when you entered. You see, it can mount pretty quick. So I typically don't like to enter on trades when the spread is more than 6, maybe at the most 7. If I feel really, really confident that all the signals are going my way, that's about the limit, right? That's about the limit. Because if it moves fast, you can make that up, in just a matter of a minute or two. You could easily move 6, 7, 8, 9, 10 pips in just a couple of minutes. No problem at all. But I don't like spreads when they start getting around 8 or 9. But I've never heard of entering a trade at like 3 something and exiting a trade in the spreads at like 25. I don't know if I've ever even seen a 25 pip spread. To me, that sounded like something was wrong or it was some sort of an anomaly. I don't know if it was because it was close to the end of the trading day, the trading week. I don't know if the spreads really jack up right before, because he was exiting right before the end of the day. And maybe, I'm trying to think like a broker. Maybe they think, we've kind of got anybody who wants to exit now. So we're going to jack them up and make a bunch of money because they know that a lot of people don't want to hold over the weekend. So that might be the answer. I don't know. He's gonna find out from them, and then I'll let you guys know. But that just seems really, really excessive. All right, so, yep, Sonny, the more volatile, the wider the spreads, correct. It's just like when premiums go up on options on futures or equities, right? The more volatile, the premiums go up, okay? The spreads get wider, the more volatile a currency pair is. It's the same premise. And, okay, shooting star on the ES 30 minute. Let's go take a look. All right. And it's about to close too in about a minute. Okay. In about a minute. Now, let's look at something. Okay. It looks like it's probably going to close as a shooting star. Is this a strong move? Yes. Did we reject at a point that made sense? Yes. The trend line. You see that? While we were gone, it rejected at the trend line. Okay. So if it ends here, could we look to scalp to the downside? Absolutely. If the bottom gets taken out, where would our targets be? I would say opening price level would be T1, and then probably somewhere down around just before the bottom of this wick could be like a T2, right? And then below there, you've got this big wick and you've got the 20, right? Now, could it take all of those out? Sure. All right, but I'm saying the higher probability ones, if we take out the bottom of this, which would be 25, 62, 50, so it would be 25, 62, 25, 25, 62, 25 or lower would be taking this out. And T1 would be the opening price level, which is 25, 53, 25. So that'd be a $9 move from there to there. From there to there is $9. And then the T2 would be somewhere down before you got to the bottom of this wick. Maybe down here around 25.46. And then that would be like a $16 move. That's if you get that action going that way. Nothing to do unless you take this out. You don't want to try to front run it. And what front running means is you enter before the signal. The signal, the trigger, is taking out the low of the shooting star. If it doesn't, you're not doing anything. You don't want to put yourself at risk. Okay, you see right now it's actually going up. Right? Because the trend right now is up. We are up here, down here, we are at 73. Okay, so we're in what they consider overbought conditions, which again, you guys know I hate that because you can stay in overbought conditions for a long time. This trend could just keep going and going and going, and you can stay overbought for a long time, right? That's one of the reasons I don't like indicators. Okay, but we're looking here. Okay, we're looking here to see if this eventually, let's just go ahead and put an alert there, right? I'm going to move this one up. And we're going to put it right there. Okay, and that's exactly it. That's one tick below this. So if it turns around and starts coming back down, it'll trigger this alert off. Right now, and we're really early in this candle, right? We got like 28 minutes to go. Price is trying to go higher. Okay? Yep, Sonny, you got it. Don't fight the trend. Go with the flow, right, until it tells you otherwise. That's why price action trading is so, to me, is so good, because the signals are telling you, you're allowing the market or the name or the symbol or the currency pair to tell you the story. Okay, so what is the story right now? What is the story right now? Strong uptrend, right? So the only reason we want to go against it is if it tells us to. Below here, it could be telling us to. Now, the reason I have these like let's call them more conservative targets if it would go that other direction, is because you could also come down here and then reverse and get a counter hammer. Okay, what is a counter hammer? It's in our rules. It's in the lessons I gave you. But it's when you're countering. Okay, it would be countering the shooting star. You can have counter shooters, right, where they counter a hammer. All right, so you gotta. That's one of the reasons I have these more conservative targets of here and here. Plus, you have this big wick. Plus, you have the 20 moving up. Those would act as support. All right, so you want to pick targets, and again, these are hypothetical if it goes our way. You want to pick targets that make sense, right? Am I more likely to get here and maybe here, or all the way down here or down into here? Okay, knowing what we know to be true, it's going to be harder to get through this big wick and then the 20. Look how many times it's acted as support already this morning. Look at this, right? So do we want to ignore that? Absolutely not, right? We want to use common sense. So we don't want to be in a trade if it gets down close to here, because look what it did the last time. Look at that bounce. Remember, when it bounced here, this was a big red candle. And then it took this big bounce back up here. Does that make sense? And look at all the times the 20 has been respected already this morning as support. Now, right now, we don't have to worry about it. It's still pushing its way back up. It's trying to push back up through here. Steve, if it happens in the next 1 to 2 candles, then we're still pretty confident about it, okay? Because you're asking, how long would I leave this alert here, right? So let's say this ends up as an inside candle. If this ends up as an inside candle of here, well, if we get, and we take that out to the bottom side, let's say it ends up as a spinning top. I'm just making something up. And then we take this out to the bottom side, all right, then we're likely to take that out, and that could really start a move to the downside, okay, at least through this area right here. So I would say you definitely, if it's the next 1 to 2 candles, it's still highly probable, right? Now, if it just keeps chopping and chopping and chopping, and then over here it starts to move down, is it as probable? Maybe not, okay? It depends, right? It depends on what this action was. It could move sideways and kind of move up and down and up and down, and it comes from up and then goes down through, maybe, right? But it becomes less probable. If it would happen on this candle or the next candle, it's more probable, higher probabilities. Okay, let's, I saw the note about Roku, so let's take a look at it. Okay, so Roku got up here and has rejected down, and now it's trying to push back up. Okay, resistance, right? We know resistance works. Right up to resistance, pushed all the way back down here. That's $2.50. So $2.50 rejection off of this resistance level. Right there. If we go, let's look at it on the daily, because that's where the signal came from. All right, I'll squeeze it in even more. Okay, the signal was above here, which was 89.51, and it's got up to a high of 90.85. So that's $1.40. That's not really a great move for Roku, right? My targets were here and here. Okay, so again, on the daily, we're still a doji, right? We're still a doji, slightly green. Slightly green. That's Roku. I'm reading your notes, Sonny. Correct me on this. With current candle closing, say at 11:30, prior to this, we had a shooting star, set an alert for any action. We simply ignore the shooting star and alert. We set the current candle closed with pattern, whatever, it could be a doji, hammer, spinning top. I mean, previous alert, the candle. Okay, void. So you're asking, is this alert void because it rejected, it pulled back a little bit, and now it's moving back up? Okay, the new, right? The new, let's call it go point, would be the top of this candle. So let's just say, I don't know if it did or didn't. I don't know. My stop would have been right under here. Okay, I probably wouldn't have moved it yet, probably. Okay, I don't usually move it until prices went about 50% in my direction. Then I move it into profitability at that point. So 50% would be between there and there, whatever that 50% number is. If price gets there, then I would take my stop from right here and move it up into profitability. And that way, if it reversed against me, at least I would know I'd end up green. All right, so you're asking, is this signal void? I mean, you could technically say that signal is void, but then you could go ahead and go again to the upside if it takes out the top of this candle, because that would show you that price is moving back in that direction again. So if you did get stopped out, you could re-enter if you get back up here and take out the top of this, because that would show you're still moving in the direction of this play right here. This is the original reason why you would have been going this direction, right? From a swing trading perspective, and we're not swing trading, but from a swing trading position perspective, you wouldn't get out of this unless the bottom of this gets taken out, right? You could see 2 or 3 or 4 candles like this, and then the move goes up. But we're not swing trading. But I'm just saying, okay, you've got to be careful here about thinking, well, this is already void. It's not technically void yet, right? I wouldn't have been stopped out yet. I don't think price reversed that much. Or did it? If it did, yeah, it did. I would have been stopped out. Okay, so your re-entry point would be the highest point of this candle. So right now, that's 90.85. So if it got to 90.86, you could look to re-enter off of this original signal because it never took out the bottom of this candle. This signal, from a technical perspective, is not void unless the bottom gets taken out. That doesn't mean that's where your stop should be, right? Our stops are tight. So if I got stopped out there, which I would have, okay, my re-entry point would be if we took out the top of this, because it would be continuing this signal. It would be continuing it. Okay, does that make sense? Yeah, okay, so you guys were basically both asking the same question, but this signal right here, right, from a technical analysis standpoint, I'm not talking about the price action that we're talking about. From a technical analysis perspective, if this is your signal, it's not truly over or void unless you take out the bottom of this shooting star doji. That doesn't mean you're in it, right? Because I would have been stopped out right there, okay? And then you could look for a re-entry right back up here, right? And why would your re-entry be right there is because that's where you caught resistance and it pushed it back down from there. So if you can break through there, in theory, you're breaking through that resistance and continuing this signal, continuing it, all right? Those are good questions. Those are good questions. Let's look at Walmart. We haven't looked at Walmart today. I'm staying on here a little bit longer than normal. Normally, this is about the time we get off, but we're trying to go through some good stuff here, so I'm going to stay on just a little bit longer. Okay, so let's see what Walmart's doing. Okay, here's the daily. Okay, we had no inside candle. We gapped up and we're going higher. Let's go to the 30-minute. We know that here recently, Walmart has been moving in a bigger fashion than normal, right? These big candles on Walmart are not normal. If we went further back in time, candles like this are more normal on Walmart, right through here. These big candles here, 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 okay, they're not as normal. Now, I think we talked about this on the last live stream. What does it look like Walmart's starting to put in? A slow curve. Okay, then when we would get back up to here, we would expect at first, when it gets up to here, there's actually like a basing area right there. See it? Okay, rally, base, drop. Okay, so we have a basing area right through here. When it gets back up around this level, whenever that may be in a few days, it may be in a couple of weeks, whatever. If it gets back up there and completes the slow curve, the first time we get here, we expect it to sell off. Okay, and it'll do one of two things typically. It's either when a slow curve completes, it'll either violently sell off and even get all the way back down near the low, or it'll start to form a cup and handle. It'll get up here, it'll reject down to maybe this level or this level, and it'll curve around, and the next time it comes up, if it's a cup and handle, it'll go up, it'll break through there, and it'll go to your next area of resistance, wherever that may be. Okay, which would be up around here. Okay, so it would get up here, it's either going to reject off sharply, or it'll reject off like this, it'll curve around, and the second time it'll come up, it'll get up to the next area of resistance. That's a high probability trade. The rejection is a high probability trade. Okay, just giving you a little FYI. All right, so that's Walmart. Let's go back and look at the market. I just haven't been spending as much time on ES today because we're trying to go through a lot of this price action stuff. Okay, so we're back up here to the trend line again. First time we rejected sharply. Are we rejecting sharply this time? No, right? And we've already taken the top out of this shooting star. See, we've already taken the top out. That's why you do not make any entry on a signal like this until the bottom is taken out. Sonny, I think it was you and I were having this conversation last night about the inverted hammers and stuff like that, inverted shooting stars, inverted hammers. The only reason they stand out, right, is when they do reverse at that point. There's so many times that a signal will happen in a trend one way or the other, and it just continues on, right? And so then it doesn't stand out as much, but this was a signal because it's coming. We have a strong uptrend. There's the signal, but that's why you don't enter until it gets taken out. Your trigger isn't until it's taken out down here, because you don't want to enter assuming that's going to happen, and then you have that happen, right? And what if that happens quickly? What if you enter the trade and you don't have a stop in, or you can't place a stop on it, okay, and it happens quickly? Now you're big time in the hole. Okay, now it's still getting resistance here. Now it didn't get up and just reject off like it did last time, but you can see it's still getting resistance right here at the trend line. Okay, so let's do this. I'll set an alert just above, and that'll let us know if it clears it to the top side. Okay, so now I got an alert just above there if it keeps moving up. Let's look at some names. Okay, let's look at Apple. Okay, Apple gapped up, went up to the 200, sold back down, and it's kind of melting up right now. It's right there at the 20. Squeeze it in, okay? All right, here's where it ended Friday. Gapped up, went up to almost the 200, pulled back down. Now it's just been melting up. And you can see, look at all these wicks. Look at all these wicks to the top side. What's that tell us? Even though it's moving up, there's a lot of resistance from sellers. Okay, that's something to be careful of, right? That's something to be careful of. If you start seeing a lot of this, and then you get some other signals, okay, then we might watch for a reversal or for the market or a name to roll over. It could be an individual name, it could be the market. When you start seeing a lot of this, okay, bigger wicks on the top than the bottom, that's showing you it keeps trying to push up and sellers keep pushing it down, pushing it down. It's melting up, but there's a lot of selling pressure. Okay, so that's something just keep your eye on throughout the rest of the day. AMD. Okay, AMD gapped up, has been both up and down. The alert went off that we're continuing higher on the market. Very similar candle to the market on open, and it's doing very similar action to the market. In fact, it's even got a little shooting star right there. Now, AMD hasn't taken that out yet. The market did. See that? Shooting star. It hasn't taken it out like the market has. So if we go back over to the market and we look at it a little bit closer, okay, there was the shooting star. We've already taken it out. AMD has the same pattern, same exact pattern. It just hasn't taken out the top of the shooting star on its chart. Okay, here we go. Okay, we're moving higher. And remember, way back here, I said if we clear this wick, it's highly likely that we make it up to this level, right there. If this alert goes off, then that's exactly what occurred. And you can see we're almost there now, right? So when we took out the sharp pivot, I said it was highly likely that we would end up making it right up here. And we're almost there right now. Let me do it like this. Okay? See? Right here? That's what this alert is. And we've been within a whisker of it already. So the probability here is when we take that sharp pivot out, okay, and not only is that a sharp pivot, it's structure, right? Higher high, higher low, we're making a higher high. This is structure. We're on the 30-minute. So those of you who may be new, whenever you hear me talk about structure, that's what it is. Higher high, higher low, meaning this low is higher than this low. This high is higher than this high. Okay, and now we're making a higher high now, meaning it's higher than this high. And the probabilities, when you took out this pivot right here, were that you were going to at least make it right back to the top of these candles. We're like literally right against it. We haven't triggered the alert yet, but look at that. We're right at the line. We just haven't triggered it. These do not go off until price actually trades there. You'll sometimes see that the high, okay, the high of this candle will sometimes actually show this number or maybe even a tick above it, and it won't trip this. That's because it didn't trade at that number. Okay, this only alert only triggers if the last trade was this price or higher. Okay, so sometimes it's kind of weird. Sometimes you'll see that like the candle, the wick may have barely pierced this, all right, but the last trade wasn't at that number. But we went right up to it. Look at that. See? High, 25.94. We have the alert set at 25.94.25. And the high of this candle here, excuse me, the close, open, I'm sorry. Open was 25.94.25. That's why we have the alert set. Okay, that's the body right here, not the wick, the body. We went right up to it. Okay, again, it's a probabilities game, and that's why I said if you take out this pivot. Now, was it smooth? No. Okay, we took it out here, came back, went over, went up, pulled back, came over, and now we went up to it. Okay, but still, all of this action is where? To the top side, right? To the top side. When we look to the left, there's nothing over here unless, like here, unless sellers step in and drive it lower. That's what happened here. There was nothing there other than it was about 50% of this candle, right? We can just eyeball it. No, that's about 50% of that candle. Sold down, but it never made a lower low, just created structure. Okay? Just created structure. And now, ever since here, we've just been working our way up, working our way up, working our way up. So even if we get up here and then start to sell off, we're still technically, till we make a lower low, technically we're trending up. All right, let's go back. You know what we haven't looked at today is Euro USD. Just because it's popular, let's look at it. All right, so here's Euro USD. And here's I want to show you the filter. Okay, so here's a case where we did get a bounce. Okay, we did get a bounce, but by the rules of the filter was technically correct because it's telling us that we should not have went long here, right? Because if we come straight down, it was below 40. Remember, if we're looking for a bounce, we don't want this to be below 40. All right, now we did get somewhat of a bounce, but the filter says if it's good to go, it should make it up to the origin of the move in, and that would be right here. Well, it definitely didn't get up there. It bounced up here to the 20, and I'm just eyeballing it. It looks like that was about a 19, 20 pip move right here, from here out to here. And then it went back down, and then it broke through, which that's what this filter is supposed to be protecting us against, is going long, thinking it's going to get back up here or maybe even to the next supply zone, which is up here. It's supposed to be protecting us from that and then getting stopped out. All right, and I can tell you, if I would have went long there, I would have been stopped out because that wouldn't have been enough of a move for me to move my stop from just below the demand zone up into profitability. I've already told you, my rule is once it's moved about 50% of my anticipated move, that's when I move it up into profitability. Then, if it gets up here close to my target, wherever that may be, I'm giving you a hypothetical. Let's just say it's supply. I probably would have had a target of right here, but let's say it was supply. Once it gets up near there, then I'll take that stop and make it into a trailing stop of around 7 to 12 pips. Because that way, if you get up here and you kind of chop around and then go higher, you can still catch more of the move. But if it gets up here and starts to bounce down, it'll just stop me out. And if the numbers are right, if the filter's right, and I like my risk to reward ratio, reward to risk ratio, then I can just flip to a short trade. Okay? All right, so I just wanted to look at that before we got off of here. Let me see, is there anything else? We haven't looked at NVIDIA today. That's another popular one. A lot of people trade. Not doing much, chopping. See this? Even with the sell-off, we've come right up here to resistance. You could almost draw one of our gray boxes right around here. Okay, I would ignore that. You see, all the way from over here, price has just basically been in the same range. Okay, so if that's something you like to trade, you could draw that on there if you want. Shop, we haven't looked at shop yet today. We know shop can move, right? Makes it attractive to people who like to trade names that move. All right, so little gap up, flush down, and then it's been going higher. All right, so this, let's take a closer look at this. Okay, so this right here is what's known as a momentum hammer. Why? Because we're in an uptrend. Okay, we're in an uptrend and we're into the move, right? This is not at the bottom of a sharp move down like this. That would be a regular or normal hammer. Okay, higher probability. Normal hammers have a higher probability. This shows that the trend should continue, and it did, right? So if you wanted to try to enter, you'd enter when you take out the top of this. Your target one would be right here, the top of this wick, right, which it's been up to. Target 2 would be this level right here, which it's trying to work its way up to now. All right, so that's a momentum hammer. That's in your price action notes. Comes in the middle to the latter stages of a move, and it's showing you that the trend is likely to continue, whatever direction. If it's a momentum shooter, a momentum shooting star, it's showing you that the trend is likely to continue to the downside. Right? But if you're not in a trade already and you're going to enter, you're not going to enter until the top of this gets taken out. And then, do you have enough reward to risk from here to here? Let's look. Right? The high of this, 428.93. The high of this, 433.36. That's not even, or right around $5 on Shop. That's not that much. Shop moves, right? We're on a 30-minute. Okay, so this is a 30-minute candle on Shop over here, and that candle moved $14. One candle, right? So I don't know if that's a trade that I would have took. I don't think that's enough, and that would definitely be our T1 because we have a gap and we have a taller wick, which means that we're probably going to get some resistance. And we did here and here. It tried to come up here. Now it's trying to go higher. It may get up there. But from a probability standpoint, I just don't know if that's a trade I would have been interested in. Okay. Chin, how do you decide these levels? Maybe a rookie question. So you're talking about this, right? My support and resistance levels. We've got a video in the YouTube channel on how to draw them, but you go to the 4-hour chart, okay? Then you go to line, draw them in on a 4-hour line chart, and I might even need to adjust them here on Shop. I do, okay? And then you start at current price and you work to the left and you want to mark sharp pivots or big moves. Sometimes they're going to be both. All right, so I'm going to go through. I haven't adjusted these in a while. Should adjust them every 2 to 3 days. So you're going to see me adjust them. Sharp pivots or bigger moves. Most recent action is the most relevant. Okay. That is being respected, that's being respected, that's being respected. So let's go this way. I'm going to move this one down right to there. This one I'm going to remove. Okay, it's no longer being respected. This one I'm going to adjust up here. Okay, up to there. This one I'm going to ignore. This one I'm going to remove. It hadn't been being respected. And this one I'm just going to adjust slightly. They do not have to be exact. You're going to be probably within a few pennies one way or the other. Now when we turn the candles back on, then we're going to go back to our 30-minute chart. We do it on a 4-hour. I've just found through experience that the 4-hour tends to give you the most accurate levels, and it's adjustable, meaning when you go back to your 30-minute or when you're on, say, a daily or whatever, the levels are going to be right. And you can always adjust them if need be. Okay, so now we're back on our 30-minute. And if we move in tighter, okay, has this level been respected? You bet it has, right? Come down here, it was respected. Come back up here, it was respected. It was respected all the way through here. Okay, as resistance, then it flipped and it became support. It's been support ever since right here. It was resistance right here. Okay, so this level has been respected. That's why when we're on the line chart, it gives us the proper area to draw it in. How would you draw it in if you're just looking at all these wicks? Which one would you take, right? Well, look, we got wicks here and we got wicks here. That's why you draw them in on a line chart. The line chart shows you right where the level needs to be. Okay, and again, it doesn't have to be exact, right? It could be 421.63 or 421.67 or whatever. You're plenty close enough. You're plenty close enough. Okay, so going back to what we were looking at before, okay, it's trying to get above this wick and move into the gap. It's trying. Still could catch resistance up in here. It could catch resistance at the bottom of this wick. But if it really gets up in here and it takes out about 50% of the gap, if it takes out about 50% of the gap, then the odds go up that it's going to get up here. You're welcome, Chin. That's what we're here for, right? And I know a couple of you have asked if I'll do a separate webinar on support and resistance where I draw in, multiple lines and we adjust and all that. I'm definitely going to do that. We're going to either do it in an evening or on a weekend when people definitely could be on, because I know a lot of people work during the day. And we'll just spend maybe 30 minutes and just do support and resistance. We won't talk about anything else. It'll just be support and resistance. How to draw them in, how to trade them, how to adjust them, those kind of things. It's really easy. It's really easy. Okay, anything else from anybody before we get off? I mean, we've went like a half hour, 35 minutes longer than we normally do, but that's because we really want to get into price action. And over these next 2 or 3 weeks, we're going to concentrate on it. And I'll show you every day. I'll show you what we see. We'll look at the setups. I had an alert just go off on QQQ, so let's check that out before we get off of here. We got to go to the daily. Nice, nice. I like that. I still, even though I'm not trading off of Thinkorswim anymore, I still use it for my charting. Okay, so there was our inside candle, right? And we just took it out to the top side. This is on the Qs. This is on the Qs. There was the inside candle, meaning it's totally inside of this candle. We just took it out to the top side. All right, where are our targets? Okay, the top of this, which would get us, let's look here, 190. It would get us a couple of dollars on the Qs, which isn't too bad, right? Isn't too bad. You can see here's normal daily candles. This is a little bit bigger one. If it clears this, then you're getting up into this wick, right? Okay, so then you'd be looking somewhere before the top of that. If it would clear that, then you have a pretty free rein run up to here. Plus you have the 200. Okay, this is on the Qs. So that's what we're looking at. Now we're above the 20. We just took this inside candle's top out. We're going to look to try to get above here, but that would probably be your target one, your T1, which would be good for a couple dollar move. I'm not looking at the premiums right now. I guess we could. Let's just go ahead and do that. Let's look at the premiums on the Qs. Okay, so if you're looking for a day trade, right here's your premiums, $2.88. So one option contract is going to cost you $285, right? And what if it moved $2? Okay, 1, 2, and you come over here because you would be selling at the bid, 390, okay? So 285 to 390, that's going to get you basically $100 of profit per contract if you moved to T1. Okay, you guys understand that? So if you enter, now this is always changing. Okay, it was 285, now it's 282, now it's 278, all right? Because it's always changing. But let's just say it was 280, all right, and we made a $2 move. 1, 2, and you look over here to the bid, it'd be about 383. Again, be about $100 per contract in profit on options. Or, obviously, if you're playing standard contracts, it'd basically be about the same thing, right? $2 move, you're going to get $2 per share that you have. Okay, so is it worth it on the Qs for you? Only you can make that decision, right? Let's go back to the chart. There was our signal right there, okay? Not getting a whole lot of movement yet, okay, but our target would be up here around 192, and our signal was at 190.52, and you'd have to be right up close to the top here, 192.72. Yeah, you could get $2 and still have a T1. Okay, because the top of this is 72. So you could get within 20 cents of that and probably not have to worry about too much of a bounce. All right, so again, that's how you start doing your calculations. All right, I'm an options guy, so that's what I would look at. All right, I'd come over here and I would go here and I would say if I bought at the money right now, I'm expecting that I can get that $2 move. What is that going to pay me per contract? If I make it, it's going to pay me about $100 per contract, right? So if I, say I took 2 contracts, I'd have $560 to make 200, but that's not my risk, right? What would my risk be? That's what you calculate it off of. My risk, I would keep my stop probably pretty tight. I'd probably come back a couple of bucks. All right, so that's a 1-for-1. Am I willing to do that? I'm probably not. Okay, maybe somebody's fine with a 1-for-1. You see what I'm saying? Risk being the same as the reward. $200 of risk to make $200 of reward. For me, that's not good enough. Okay, for me, that's not good enough. So unless I thought I was highly likely to make it up here, or higher, it's probably not a trade for me. Okay, it's probably not a trade for me. You guys, here, let me do this. Let me go to the 4-hour. Let me draw this in for you. I'll add some levels and adjust some levels here on the Qs. Okay, current price. We start to work to the left. I have to make sure I have my price level tool right here. Okay, sharp pivots or bigger moves. Level. I'm going to ignore that one because it's sort of close. Okay, I definitely need one right here. And I don't need to do anything over there. Look how many times this has been respected just recently, this level here. Is it any wonder this is where price started to turn? You see that? Respected it, respected it, respected it, respected it, and then it started moving up. Okay? All right. Then right here, we're going to want a level. Okay, we're going to ignore that because it's so close. This one can be removed. I'm just cleaning this chart up. This one can be adjusted. Needs to go about right there. This one, we're going to adjust it for now. I don't even know if I would remove that normally, but I'm going to adjust it right there. This one can be removed. This one can be removed. This one, let's adjust it. Hang on. Got to activate it. There we go. Okay, so it's going to come up to the top of here. This one right above it, I'm going to remove. Most recent is the most critical. Okay, this I'm going to, when you see a flat line like you have over here, that's sort of a basing area. So we definitely want to mark that. Okay, remove this one. I'm just showing you how I would clean it. There's a flat line, so we definitely want to leave that. That's a basing area. This one's accurate. This one's accurate. Okay, so we're good. Now we go back, put it back to candles. Go back to the time frame that you normally work off of. For me, that's a 30-minute. Now let's squeeze it in. And now we have our more accurate levels. Okay, I can remove this line. Whenever you see a dotted line like that, there was a gap somewhere at one time. I just never removed it. Like I could draw it in right here. You know, there's a gap right here. See that? There was a gap here, but we've already filled it. Yeah, Sonny, when we do that class or whatever we want to call it, live stream on support and resistance, we'll absolutely do that, because that's what we'll do is we'll take some charts that have no lines at all and I'll draw them in, and you guys could be drawing them in at the same time on your own, and then when we get done you could match and see if your levels are similar to mine. Now, let me tell you this. One thing that I do that might be a little bit different than some people is I do ignore most of the smaller stuff. Some people draw that in, but to me that's driving you crazy, because none of those moves are going to give you enough reward to risk to be worried about, right? You need these kind of moves to make some money, right? You see what I'm saying? You could have a level here, and you could have a level here, and you could have a level here, and so on and so forth. But those little moves aren't necessarily going to make you any money. So why are you going to draw them in? Because all it does is drive you crazy having all those lines on your chart where you're probably not going to trade most of them. Okay, we're looking for bigger moves, higher probability moves. Okay. Now what I drew in here, just so you guys know, and this is something we're going to get to. I haven't put the notes in there yet. This is part of price action. These are broadening triangles, and it's just what it sounds like. It's when a triangle gets bigger and bigger. Now, it hasn't moved back down here yet, right? So if we keep going in the way we are, then it might not be a broadening triangle. It might actually be more of a channel this way, okay? But you want to know when you start seeing 1, 2, 3, and actually we had basically a fourth. Okay, and then down here we'd already had 1, 2, 3 touches. I'll sometimes go ahead and draw that in, because what you'll find a lot of times is price will go here, 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 and you can start to catch those moves, right? Especially when it's on a 30-minute or a 15-minute or a 5-minute. You'll know where price is likely to go. Okay, it's just another thing, and we're going to get to that. It's part of price action. Okay, so Sonny, yes, we will definitely do that. When we do that live stream on support and resistance, we're going to cover all that. We'll do some charts that have nothing on them. I'll draw levels in. You guys can draw them in on your own charts. Then you can compare. And again, all you got to do is be close. Right? If I'm at 192.29 and you're at 192.33, that's fine. Right? Or if I'm at 185.01 and you're at 184.97, that's fine. That's good. You don't have to be absolutely exact. Because again, when I'm trading, I'm going to get out slightly before that anyway. So it doesn't matter if I'm exact to the penny. Right? Even on, if we go back to the market, it's easier to be exact on the market if you really want to be. Okay, I don't even really worry about it. Okay, but like a level here, 25.61.75. how do you know if you want to be exact, which I'm telling you, as long as you're within a tick or two, you're fine. Okay, how do I know if that level is exact? Just put your cursor right here and it tells you where it closed. Okay, you see that up there? You see that on the screen where it says C? That's where it closed, 25.61.75. So if you want that line to be absolutely exact, that's how you do it. It takes a lot more time, and it's really probably not that critically important if you're off by a tick. Okay, just drawing it in by sight, you're probably going to be close enough, and you'll probably get it almost exact most of the time. That's how you know if you are exact. Hover over the line, look where the price closed. It closed at 25.61.75. That tells you exactly where that level is. So you can do that like on the market. It's pretty easy. Well, you can do it on any chart. It'll show you where price closed. Okay. Now let's go back to the candles because I want to show you something. Look at this, break, retest, trying to push. So it might be trying to go break, retest, and go. Right? Where would the obstacle be if that starts to happen? It's this wick right here. Okay, it's this wick right here. If it got over that, let's say it breaks, retests, and goes. If it can get over this, it should easily make it up to this level. You notice our alert went off. We did make it up to the top of this candle, right? That's where that poked through right there. And then it pushed it down to here. Now we're going to see, is it going to be able to go higher? And you also notice why I'll leave these trend lines on my chart for quite a while, right? It's continuing to be respected. It's almost like a floating support and resistance level, right? Instead of being horizontal, it's not really vertical, but it's sort of floating with price. And the only reason we know where it should be is because of previous price action. It's been respected in the past. That's why I drew it on there. All right, so again, if we would get a break, retest, and go, here's your first obstacle. If it gets over that, it should pretty easily get to 26.19.25, right? Which is just over the top of the body of this candle, but below the wick. But below the wick. So let me give you a little insight on support and resistance lines. Let's go look at a 4-hour chart. Let me turn it to lines. Okay, we've already cleaned this up, so all right. You see, let me get even closer. Okay, you see how it's respected, all right, respected. But when I go to candles, I want you to notice something. The wicks and even some of the body sometimes may be through, not in all cases, like here, the body's stopped right there, but the wicks are poking through. Why is it important to ignore the wicks when you're drawing in your support and resistance levels? Okay, what we're interested in is where did price actually end up closing primarily, because how many times, like on a hammer or a shooting star, we get those tall wicks, right? And then it sells back down. We want to know the actual levels where price was respected. So I just wanted to show that to you. That's why, you know, again, this just has happened over many years of experience. That's why I've been able to determine that using a line chart is much more accurate and beneficial than trying to draw support and resistance off of a candle chart. Because then you're just going nuts by trying to figure out which wicks should I respect and which wicks shouldn't I. Okay, I just ignored the wicks altogether and used the line chart, and you see it just works so much better. Okay, that's how I came to that conclusion of using both the 4-hour and the line chart, is just through many, many years of testing and trying different things. At one time I used to draw them off of the daily chart. And then at one time I thought, well, wait a minute, I'm primarily a scalper. Maybe I should be drawing them off of like a 15-minute chart, or, even a 1 hour. Maybe, you start drawing them off of there, and again, that's when you get like your chart just looks like it has a million lines on it. And it will drive you nuts because you're not going to take those tiny little trades. There's no reward to risk there. There's no reward to risk. So you just don't want your chart getting all clouded up with a million support and resistance levels. You want to know the most important ones. And to me, those are the bigger moves and the sharp pivots, right? Sharp pivot. That's why this is important, right? Sharp pivot right there. Okay, bigger moves are important. Okay, from here to here, that's a bigger move. Come back over here. Okay, you guys see this? Like down here. Here's the level, all right? Even though price dipped down and bounced off of this trend line, like I said, and here, price respected this trend line, and then we get these big moves off of it. It's important to know. It's how it's going to help you in conjunction with other things to make better trades. All right, so right now, right before we get off, this is where we're leaving. We broke through, we've retested, we're waiting to see, are we going to go? If we go, we have to take out the top of this, and then we already know, because we already looked, over here, this wick would be our next obstacle. Okay. Guys, I'm going to go ahead and wrap it up. We've spent a lot of time, which I'm happy to do, but we spent a lot of time on here today. It's time to grab some lunch, get something to eat, and then I'm probably going to take a little break, and then I'll check back in the rooms here a little bit later this afternoon. So everybody have a great day. Thanks for joining me. Bye-bye.